Hi everyone, it's Jeremy Huffman. I'm really excited to be here to teach your Baskets to Pallets module on the basic financials and the financial ratios. And I got to tell you, this has actually been quite challenging for me. It's definitely took me back and really made me work hard to be able to figure everything out. And as we were going through it, and I was recognizing how difficult the process was, we ended up reaching out to Cornell to see if anybody else had been having the same issues that we were, and we found out that pretty much all the way across the country, everybody's having to adjust this because the scenario it's really high level stuff, and it starts with the Schedule F, and that's your cash basis accounting, and then you're going through the income worksheet to be able to change it to accrual basis accounting. And the reason for that is accrual basis accounting has different financial ratios and equations that are more complex than what can be created and calculated from with cash basis accounting. And so the numbers were having a hard time matching up, and we didn't know that we would be able to provide the most value by trying to wade through all of the details and differences of everything along those lines. And so we came up with a plan, and we were able to access a PowerPoint that Marianne Corrali had put together, and then we were able to adapt it a little bit more specifically to the situation that we're going to try to talk to you about the end. And so we were trying to figure out how to add as much value as possible to this entire module. And we think that we're going to be able to do that. And it's going to be by talking about the systems, in particular, that Huffman's Homestead is utilizing in order to be able to manage all of the data and inflows that come in from inventories and sales and tracking your taxes and being able to have your numbers in order enough where you can actually calculate these ratios so that you can, and also in particular to work very efficiently with your certified public accountant, who we utilize on an annual basis to figure this stuff out for us. So this is the end of the first slide. I've been having issues with my microphone, and this is now my 5th attempt at trying to pull this off. So I'm going to pause right here, and we're going to start right back up on the next slide. All right, bear with me. Thank you. Okay, so we're on to the next slide, and I've got all my microphone issues resolved. So let's start getting in and diving into the content of all of this. And so over the course of this module, what we're going to be doing is we're going to be reviewing the financial position of your business and your farm business, and how that utilizing farm records and to be able to develop those different financial statements. And we're going to focus a bit on that for a while before we get to the different systems that you guys will be able to implement. But there should be a lot of value across the way, and hopefully we'll be able to explain everything as efficiently and quickly so that it does make sense. So how do we measure our financial health? And there's 3 parts to this. It's the income statement, the cash flow statement, and then the balance sheet. And I forgot to put the balance sheet up there, but in the next on this slide, what it shows is 3 different types of things and how they all are kind of integrated together and work together. And so how you have to take information from the cash flow statement to be able to develop your income statement. And the same thing from your balance sheet. And, your cash flow statement, obviously it says on there, it tracks your cash and your income and your expenses. On your balance sheet, it tracks your assets, all the stuff that you own, your tractors, your fencing. Your liabilities is how much you owe and on that tractor. And the net worth is the difference between the assets and the liabilities. So then you come over to your income statement, and you have your cash income coming in and then the different expenses going out. You'll have changes in assets, and that kind of means depreciation for the tractor, or if you bought something new, or if your cash flow is really positive and your bank accounts are growing. It'll also show changes in liabilities if you took a loan out to get that new tractor. And then you can determine what's your net farm income and accrual adjusted profit. And the income statement and accrual adjusted profit, that helps the CPA be able to determine some of those financial ratios. So the financial ratios, they're helping to assess our profitability, how much debt we can take on as farmers, the type of financial risk, and kind of give you a measurement to know, oh my gosh, maybe I'm overextending myself a little bit. And then there's the ratios that are developed for each of the different financial measures. And so to be able to pull it all together, we have to know what our assets and our liability values are. And, we hopefully done the work on the worksheets, and we've been able to determine, how much principal and interest payments are going out every month, how much our gross farm revenue is, our net farm income, how much interest, again, with credit cards and that tractor expense, and then your depreciation expense. It's how much your tractor loses in value every single year. And the IRS has given specific codes for different types of equipment. If it's a building or a tractor or a computer, they all are depreciated at a different level and a different time. And so it's really important to be able to absorb all of these expenses, and just knowing how detailed the IRS has made everything, it's really important to be working with a CPA to maximize that. So then you also want to be able to track your non-farm income. If somebody's working off the farm, then your living expenses maybe also needs to include being self-employed, your health insurance, and how expensive that is. I know that's particularly difficult for us. So then you have your income tax payments, unpaid labor. You kind of want to put some sort of value on that. My dad and I really connect out here on our farm, and he's the best laborer I've got. He comes out here with a smile and he works for free. So there's definitely value in that. And then you have to think about how valuable your time is and the work that you put in, both working on your farm and managing. I mean, think about what we're learning right now in regards to financial health. And that's absolutely something that you have to manage as a farm. So let's assess the viability of your farm. It's the ability of the receipts of the farm, which means the monies and income flows that are coming in to pay your expenses, to make your debt payments, and then provide enough for your family to live and survive. Hopefully, possibly even thrive. Then we have financial statements. They're the first tools that we're going to use after the farm records are in order. Once we've got all of our everything recorded and kind of in the places that we can, your records are going to show all of your income, your expenses, any capital purchases like that tractor we talked about. It's going to have a depreciation statement. Again, I keep using this tractor example, but if you use it for a year, it's not as valuable as it was when you bought it. So then we have to take into account your cash balances, your interest and your debt payments, and then the inventories of all of your crops and livestock. And if you're looking or thinking about getting a loan, you just have to know that the banks are going to require all sorts of different financial statements. But even if you don't have any debt, you need to make sure that you're really watching and managing these things, because it can really tell you, not only for your own satisfaction, but it can tell you where you're wasting money. Maybe raising turkey isn't the best idea. Maybe the vegetables are the most profitable. Maybe the hogs are draining you. Who knows what it is? But if you don't have that information, you're not going to be able to make good decisions. And that's really what this is all about, is giving yourself the ability to make good decisions. And so the balance sheet, we got to start with that. It's a snapshot of your business. It's pretty much any given point in time, and it should be done once a year. The way that we do this, we're able to see this in real time throughout the year. The software program that we're going to discuss a little bit more at length later, it allows us to oh my goodness, it's just at will. All we have to do is click on it. It correlates all of our information for us. So it's required by financial institutions if there's a loan in place, if you want to get a new one, or if you want to refinance something. And it indicates what percentage of equity is owned by the farmer. And that is, so if you sold everything tomorrow, and you paid everything off, what's that percentage? So don't be afraid of the balance sheet. It's just a crucial component of the financial statements, and it gives you a big, nice, broad view of everything. So we're going to use an example here for you, and we're going to review some of these details. And for the first example, keep in mind that assets minus liabilities is the owner's equity. And so Tom's got $420,000 and $70,000, and you can see what the difference is. And so his percentage of his debt to equity ratio is 20%. The debt to equity ratio, in my experience, is the single most important equation that any lender looks at. And so in this case, you can tell that Tom's not doing too bad. He's okay. So liquidity, it's the ability of the farm to meet its financial obligations as they come due. He's solvent at the farm and was able to use the cash flow for his current expenses with his current assets. Solvency is a little bit different. Liquidity is a little bit more in the short term. Solvency is the ability of the farm to pay all of its debts if it were sold tomorrow. So as you look over the balance sheet, you can see that in this example, there's more than enough assets to sell everything and pay off all of the debts. So the next statement that we're going to talk about is the income statement. It's also called the profit and loss statement. It takes into consideration the different inventories that you have, your accounts payable, your accounts receivable, the people that owe you money, and it's based on accrual basis accounting, and it's required by the banks, and it's because as you get to the higher level equations in accounting, the banks are going to be able to take that accrual based accounting information, plug it into their equations, and really take a look at the viability in the short, medium, and long term of the farm and the business. So it's pretty important to have this for them. So it can be pretty revealing to business owners as well. If you think that your checkbook balance is a good indicator of profit, because your checkbook that's cash basis accounting. As soon as the money is in there, it's in there. It doesn't track all of the longer term stuff, and it only shows a snapshot of the short term. So, and the last thing that it does is opportunity costs. And opportunity cost is actually something that's kind of funneled economics and management, what I was trained in, and so it's the comparing of the work that we're doing as farmers. And everybody here who's taking this course is very talented people, and so you have to think that all of us could be doing something differently other than farming. Maybe it's some CEO position or an investment banker or managing commercial real estate. Who knows? But we could be in those fields. We're just choosing that this is what our passion is. And so sometimes you have to be able to look at the opportunity cost and be able to say, are these good things? And then you can make that type of decision if you have a good result and control of your numbers on the farm. Is it better to add another high tunnel, or am I getting close to the same profit just by my succession planting out in the fields? So things to think about. So then lastly, we have the income and expense worksheet. And so if you look at the example, you're noting that he has an actual income around 25 grand and 17.5 approximately on his expenses. So he's cash flow positive, and he had some low times. And of course, $7,500 over the course of the year isn't exactly where we want to be. But he's eating healthy, and we should probably account for some of the profits in regards to that. So the rate of return, it kind of depends on how much time you're spending. And so if we go back to that opportunity cost, if we were making 40 grand for full-time work, and we spent 25% of our time working on the farm, that has at least an unpaid labor value of 10 grand. But in this scenario, since Tom's retired, he doesn't have that opportunity cost. He's able to just enjoy his retirement and still have some sort of passion in his life. But we as new farmers need to put value. So then you have your cash flow statement, where'd the money go, and it shows in gross terms our income, our expenses, our new loans, anything new that we bought like the tractor, our payments to principal, and the money coming in from other sources. So over the course of the year, this kind of gives you a good illustrative idea of where all of your money went. It helps you see the big picture in the long run. So there's pretty much 4 stages, and this is just kind of how you would start, say, for example, in the beginning of January after you sold everything from last year. So you've got your cash, and then you go out and you're buying all of your seeds and your feed, and you're raising your animals and growing your crops. And then you get to the end of the season and you harvest, and we've all mastered the whole sales thing, of course, right? So then we sell it all. It takes 30 days for us to get our money for the grain or the chicken that we sold, and we go into accounts receivable, and then finally we get paid, and we have our cash, and we've started all over again. So that's just kind of an illustrative picture of the life cycle of our statements and how the cash flow statement kind of works. So you take your farm receipts, and you're able to track your farm expenses, and that ends up resulting in your net cash farm income. And then some of us, we take money out of the farm. We have to, and so we take personal sometimes, and then we'll take net cash withdrawals. That's right out of the profit. So that'll end up leaving us with a net that's provided by our operating activities, and then we go into the sale of assets. If you've had a tractor for 20 years and you've depreciated it, and you sell it, you're generally going to have some sort of capital gains in regards to that. And that's because you've sold that, or not sold it, but depreciated it all the way down to zero. And when you do sell it, because there is value in that older equipment, that actually, as far as the IRS is considered, is a capital gain. So any money that's borrowed is added into the cash flow statement, and the principal payments are deducted from the cash flow. And then the beginning and ending cash are reconciled, and anything coming in from reserves or going into the other reserves are noted on the cash flow statement. So I know that that's kind of a quick and fast overview of the cash flow statement and these different balance sheets and whatnot, but it gives us a good idea and basis for going into the next part. And one of the really important things about keeping good records, and this is particularly applicable to us out here at Huffman's Homestead, is we're interested in so many different things, from the market gardening to our goats and our milk and our goat's milk soap and the honey and the bees and all of it. And tracking these expenses in the way that we do allows us to know exactly how much went into each one of these areas. And being able to make good decisions with knowing where that money is flowing, like to the penny almost, it really allows us to make educated decisions and say, and prioritize over what we're trying to get done. And so some of the times, one enterprise can sort another, but it's good to know which ones are making money. So the long-term benefits of the people that are tracking their all of their data inputs and keeping better records are going to make more money, and they're going to end up not wasting time on enterprises that aren't profitable. So if you understand the various ways to measure profitability, it's easy to do so once you get the systems in place to manage it all. Don't be intimidated. This is something that we all have to do. The IRS makes us every single year. So if we can be smart and put some things in place, we can have a lot of confidence in our record keepings. It makes it a lot easier to keep on top of it. And, we're creative. We're problem solvers. We can learn this as we go. And we can make this easier and better over the course of time. So as you get into the financial ratios, basically this was the hardest part, and of going through the cash basis accounting and the accrual basis accounting income worksheet to be able to find the data, to be able to calculate these ratios. And we didn't want to spend too much time on this. We just wanted to point out that, for Huffman's Homestead, I have a property management company, and I can drywall. I'm pretty good at it. But I've got this guy, and I swear he's the best drywaller east of the Mississippi, because what would take me a month to do, he can do in 4 days. And I feel like that's exactly the same thing in regards to getting to all of these accrual basis accounting ratios. And so for us, the way that we do it is we go through and we track our records all year long. Mostly my wife, Valerie, does. She's been kind of the genesis for our whole system. But it's just the way that it connects with our CPA. We are able to rely on them the same way that we would rely on the drywaller to be able to calculate this annually after we've done our taxes for the year. And so it makes us really easy for us to be able to do this by utilizing a professional, so that we can actually have real information and know that it's accurate and know that it's right. So that's the prelude to our systems for success. And this is where we're getting into what we are doing as individuals, as a farm, as a family. And we just kind of wanted to share it with you, because we do think that there's value. And maybe there's something here that you'll take. Maybe you're not comfortable enough with software programs being connected to every single thing that you do. But I'm overwhelmed enough as it is. And this is what we found is the way that we're able to do this in an efficient way that absorbs everything. And there's really important reasons why. And this is in an area where if you can be efficient, you can set yourself apart, and it will directly contribute to the success of your farm. And so we use QuickBooks Online, like the professional one. It's expensive and it's pricey. I think it's around $35 a month, and we have accounts set up for each one of our corporations, for the property management company, for the farm, and then for the holding corporation that manages all of the farms. And when we have this many different things where we need to track deductions and make sure everything stays separated, it's been the only way that we've been able to do it. And so the thing that's really fascinating is with the online version, it links directly in real time to our CPA, so that over the course of the year, she's having questions with different expenses or something like that. She logs onto it about quarterly to take a peek. And we're able to answer questions much sooner about the different things than if it was all at the end of the year when nobody can remember what it is. And so it's made collaboration with her just incredible. That alone, in my opinion, is why it is worth QuickBooks Online. We also linked it to our bank accounts, our farm bank accounts, our corporate bank accounts. We've got it linked to our point of sale. We've got it linked to Huffman's Homesteads, credit cards and debit cards, our sales invoicing. It tracks accounts receivable, accounts payable. It generates invoices for us. And once you have the account set up in there, it just makes it so easy. It's virtually automatic for billing and things along those lines. And then when we were able to track all of the different just kind of ancillary expenses, like our mileage or meals out or when we're marketing. And through all of this, we're able to collect and manage all of this data. And it's gotten so efficient now that we're good at it that Valerie can, and she's the primary, like I said, she's the one who pulled all of this together. So I got to give credit where credit's due. And she'll sit down for an hour or two every month, and she'll go through for making sure all the data got uploaded. She'll reconcile all of the expenses, make sure they're all in the right categories, and she'll file the receipts. And then she'll be, hey, Jeremy, what was this expense? What was this expense? And we do it like that. And so this past year it was the best year we ever did. And so it's taken us a long time to kind of develop the system. And our CPA at the end of the year this year, as we're going into 2018, she had a few questions for us. We had to make a few adjustments because she's got a 0.002% audit percentage. And that's one of the reasons why we love doing it, because we know that we're following the rules. And we were able to, by working that closely with her, file 6 corporations before the March 15th deadline with almost no stress. And it hasn't been like that for us. This was the first year that we ever had it totally pulled together, and it was just amazing. So it's just a huge improvement in our life. And so one of the things that's really interesting, and we got to talk about this a little bit, just from a theoretical perspective, and the way that you think about being a farmer and that farm being a business. And so it's that crazy scenario where you hear about Warren Buffett paying a lower percentage tax rate than his secretary. And it has to do with the way that the IRS is kind of, and this is kind of my thought on it, they kind of created a tax pyramid. We're going to talk about that. But in the way that you think about your farm, in the way that you think about your business, almost everywhere that I go, almost every person that I talk to, in some way, fashion, or form, it's related to my farm. It's related to my mission working with veterans in agriculture. It's related to the work that I'm doing trying to build this business. So therefore, it can be tax deductible. But it has to be done right. You have to be a little bit sophisticated, and we rely on our CPA to make sure that, because we're catching every data point, we're catching every expense, and we're relying on her to make sure that we are following the law and that we are following the rules. And so I just had this amazing dinner with a friend in Lansing like a week and a half ago, and he's a farmer, he's a honeybee guy, he's one of the biggest agricultural influencers in our success at Huffman's Homestead. And we went out to dinner, and it was his wife and mine, and we're sitting there, and all we're talking about is farming. All we're talking about is marketing his honey and the sales problems and supply issues that he's having, because he's having some tremendous success raising these bees. And we get done with the end of the dinner, and we go to pay, and I was we were paying for Valerie and I were paying for ourselves, and they were paying for him and his wife. And he walks up and he pays some cash. And I'm looking at him sideways. I'm like, man, you got a PhD. What are you doing? Why? All we did was talk about farming and business. This whole dinner is deductible. So I walked up and I paid for it with my Huffman's Homestead credit card. And as I'm getting my receipt, I asked him to print out a receipt, and we talked about sales the whole time. And so, one of the things, basically the event happened where we had this business meeting. We were talking over it all over dinner. We were talking about marketing and increasing our sales outlets. And his dinner cost $41. My dinner cost $41. And both of our dinners were deductible, but he didn't absorb that expense. He did not absorb that as business because he wasn't thinking about that being a business expense. And then versus the way that we think about it. And it went right onto the Huffman's Homestead credit card. And then on the receipt, I made a note talking about the fact that it was a marketing meeting because we were working and discussing our sales outlets. And so this is just a kind of note on, and it's kind of the way that the IRS has just made this difficult, and another necessary reason why it's just so important to work with a CPA. So you go out to all of these dinners, and almost all of them are going to be talking about sales and selling your produce and whatever it is that's coming off your farm. Most people would just record them as business dinners versus an actual marketing dinner. A business dinner is 50% deductible based on the last time I had researched this versus a marketing dinner as being 100% deductible. And so the IRS has created a situation where, as business owners and everything along those lines, farmers have tax advantage status. And pretty much throughout the course of the laws and the way everything's set up, there's kind of a tax pyramid that's been created by all of this. And I look about it, and this is just kind of my own thing. It's in my head. And I think about where we are and who's the most advantaged. And all of the churches and the clergy are utterly in a tax advantage status ahead of everybody else. And I really think that farmers are in a position that's even better than corporations. Because every single thing that we do in our lives can be related to farming in some way. So that if you're doing things efficiently, you're absorbing all of the expenses and all the mileage and everything that you need to do to be able to be very successful. The IRS has very lenient laws about profitability and the amount of time that it takes to be showing profitability versus regular corporations. And so I put farmers second on the list in the most advantaged status. Then you have corporations. They're able to absorb their expenses. They're able to pay out monies either through dividends or different types of ways that S corporations and things work to get money to the individual owners of those corporations. And then down at the bottom, unfortunately, we have the employees. We have the people that are working for a living and collecting that paycheck every 2 weeks. Your taxes get taken out every single time. You don't get to deduct anything. Driving to work, none of that stuff. And so the normal person that's working down there, they have the least tax advantage status out of everybody. And so that's kind of how I see the scenario that's out there. And so along the lines of thinking as farmers, as businessmen, you're in a tax advantage status ahead of corporations. And if you're smart and strategic about it, you can utilize that to your farm's benefit. And I encourage you all to do so. And so our keys to kind of winning at this have been just, it's absolutely imperative to utilize technology. There's so much going on. You're headed in so many different directions. There's so many skills that we have to master. That if we're not utilizing technology to link every financial transaction in your life, you're missing something. Guaranteed, 100%. There's no way past that. You are missing something. And I know that we miss something sometimes too. When I pay cash and I don't bring a receipt back, I hear about it every single time. So the second part of this is now that you've got the technology in place, you have the ability to deduct every single expense that's related to your farm and your activities as a farmer. So link those credit cards, your business accounts, your bank accounts to all of this, and you're able to absorb every single one with very specific things. Like if every single thing is on your farm's credit card that you bought for that farm, it is so easy to itemize when you're working those numbers every single month. One of the things that's really interesting is that we save a tremendous amount of money with our CPA. My father uses the same CPA that we do, and he actually referred us to hers. He thinks he's like some sort of IRS savant, and he shows up with like the shoeboxes full of receipts. And it's just ridiculous because it's really difficult for the CPA to be able to work with that. She has to pay her bookkeeper to be able to get everything organized so it's the same documents that were given her. And he just thinks that he's like sophisticated and smart about it. And it costs him so much more money to work with our CPA the way that he does it than the way that we do it. And he's an older generation. He thinks that that's sophistication, and we think that it's just being difficult. So by working with the CPA and having her connected to our online thing, it's very easy for us to be able to file all of our taxes for the 6 corporations. And at the end of the year, we say, all right, please produce the financial ratios for us for everything so that we can kind of look at the different, our rental properties and make sure those are earning properly and that our margins are where we want to. And then we can analyze the different things that we're doing on the farm and, determine what is good and what's working. So if you're just being smart and you get the setup in there and then you do the work, it really just gives you an opportunity to focus on farming. And that's what I love the most about it. If I wanted to be sitting in an office working numbers every single day, I'd be getting paid a lot more and I'd be doing exactly that, but I'm not. So that's kind of, we're near the end here. I appreciate everybody sitting all the way through this and listening to every single thing that I had to say. I know that you're obligated to and that you can't turn me off. So if you have any questions, please do not hesitate to send anything out. I really looking forward to hearing your questions, and I hope that we've been able to provide something of value as we've been going through this course. And I thank you, and I think that there's something here for you. If you take one thing away and you're able to make your life just a little bit easier, I will consider this module a success. So thank you all very much for your time. Thanks for your hard work, and happy farming.